All right, welcome back. This is the Fran Tarkenton Show on Sirius XM Stars Channel 107. If you want to weigh in here, the number to call is 855-372-6107. My next two guests are two of my favorite people. I work with them on a daily basis. They're two of the finest human beings in the world and most talented. It's Phillip Allen and Tony Dale. And they are experts, and I mean experts, in assisting people in learning how to make their retirement savings last a lifetime. And you know, the biggest fear of seniors is running out of money in your retirement years. And Phillip and Tony are seeing a growing problem with seniors outliving their retirement savings. Many seniors live in quiet desperation due to poor planning. And that's what we're here to talk about tonight, because I know we have many people 50 and over that are listening here. If you're under 50 and you've got parents or grandparents going through this, you need to listen to these two people, because these are two of the finest retirement income planners using safe money alternatives in this entire country. Welcome, Phillip Allen and Tony Dale. And Tony, to start with you, what do you want to say about all this?
Well, I'll tell you the most amazing thing today. I was standing downstairs in your lobby waiting for my partner, Phillip, and just happened to be watching CNN, and on the screen, it's the first headline up above says, the president's agenda for his second term is global warming. Directly below it was another crawl. There has been a 40% drop in net worth of families since he's been in office. And I thought, how could there be such a cosmic disconnect as this? And this has happened while we've been through now 12 years of what is now what is called a secular bear market. A lot of people don't understand, Fran, and I know you do, that markets, like everything else in the universe, are cyclical. Now, most of us watch the news and we're seeing what the market did, like the market was down 150 points the Dow today, for example. Well, that was just a little tiny wavelet, let us say. But it happened inside a much grander cycle. And these cycles have gone on historically for years. The average secular market, and that's technically what they're called, can last 18 to 25 years. For example, the Depression, that's a 25-year bear market. Or we can go from 82 to 2000, and you have the greatest bull market we ever had. That was an 18-year market. But here's the thing. That market from 82 to 2000 is when the largest demographic group in the country began to fund their retirement plans. That was the majority of the people you were just talking about.
Yeah.
Well, so we were all sort of told that, well, markets always come back over time. All you have to do to have a successful retirement plan is very simple. You just have to have a diversified portfolio of mutual funds and just keep dollar cost averaging into that. And don't worry if the market goes down in the dot-com crash or the credit collapse, because it always comes back and it's averaged 8%. Well, we're in year 12 now, and the market is far lower than it was in 2000. Now, why is that? Well, one of the reasons is, of course, the secular cycle, but another thing is we are entering a phase of demographics, Fran, where instead of being in the accumulation phase of our investment lives, which we were from 82 to 2000, and incidentally, that's what helped create that bull market, there are 10,000 baby boomers retiring a day and beginning to take income, and this is going to go on now for, 25, 30 more years. So this changes the dynamic.
The problem with that is from 82 to 2000, this buy and hold mentality was ingrained where people invest in unprotected equities, and it didn't matter where you put your money, as long as it was somewhat diversified, you made money.
Yeah.
But now that we're in this long bear market, people are wondering, hey, what's changed? What's different? And I was thinking the other day, what's going on in Europe. You know, I don't know if they're ever going to get that straightened out. Sometimes I wonder if Warren Buffett and Harry Potter combined could help them.
Yeah.
But when you see your retirement in unprotected equities going up and down on the basis of the Greek Parliament voting or China lowering interest rates,
that's pretty scary.
You need to consider safe money alternatives to your retirement plan, and they're out there.
Well, talk about that, Tony and Phillip. I mean, what are you telling seniors? What are you sharing with them that they should be looking at and planning their retirement years that they don't run out of money?
Well, one thing that we know is we talk a lot about what government's not good at, and they're not good at state governments funding enough money for their pension plans for their teachers and things like that, and they're not good at, seems like, saving enough money to fund Social Security, but they are good at regulation. And one thing that they're good at regulating is insurance companies, making sure these insurance companies have enough assets to fund their obligations. And the only way that in the long term that you can have complete security, you can't outlive your money, is to have longevity insurance.
Yeah.
You can simply insure the fact that you won't outlive your retirement savings.
So you're talking about insurance products.
Yes.
And here's an interesting thought, Fran, and I love one of my favorite quotes. Mark Twain said, "History doesn't always repeat, but it usually rhymes." Well, let's go back to the last really bad bear market we had, which was the Depression. Well, prior to that, we had the Roaring '20s, a very brief but steep secular bull market. That's when our grandparents were all going to get rich in the market. But then the market changed, and it dropped, and all of a sudden those same people completely lost faith in the stock market, and they began to look for someplace else safe to put their money. And that is when annuities became one of the top places people put their money.
You're talking about fixed index annuities, not variable annuities.
No, this is I'm talking back
okay.
in the Depression. They didn't have them then. The only annuities then were just fixed annuities.
Okay.
But keep in mind, people were used to this then because everyone had pensions. Remember, it wasn't until the 80s came along that all of a sudden pensions went away and 401ks and IRAs came
That's
along.
right.
And all of a sudden it became mutual funds. Well, billions of dollars since from 09 to present have come out of the stock market in retail investors. Now you say, how could it possibly be the market's gone up? And the answer is the market has gone up because of the Fed intervening in the market and propping it up through the Fed's fund rate dropping to zero, the big banks and so forth. Here's the point I want to make in this. All of a sudden, and every survey, and you kind of alluded to this, Fran, every survey shows that the major concern people have now is running out of income. Well, there's only one thing that will address that, and that is some form of a pension or annuity, which of course are essentially the same things. Some form of guaranteed stream of income that one can not outlive. And there are many ways to go at that, and many different types. Some are good, some not so good, depending on the person, and every person's different. The point is this. If you have not investigated the potential of these to give yourself some security and income, then you probably ought to do that.
Well, let me say this. We'll take a break here, but Tony and Phillip, you can reach them on their toll-free number at 800-687-6768. That's 800-687-6768. Doesn't cost you any money. They'll be glad to talk to you, send you some information on what they're talking about safe money alternatives, because they work with literally thousands of seniors on making sure that they have a plan